Well, good morning, everybody. Welcome to the first in our series of webinars about the next few months. And we're very pleased that so many people are able to join us today. I hope that you're able to see the presentation quite clearly that I'll be presenting, and also that you're able to ask any questions. So my name is Andrew Tate. I'm a restructuring partner with Kreston Reeves. I was due to be joined by my colleague Caitlin, who unfortunately is sick today. It would have been quite a feat if Caitlin had been able to join us, because Caitlin's actually went home to Australia in March, and she wasn't then able to get back. So we are expecting her back in the UK next week, but unfortunately she's been struck down by an illness today, so can't be with us. So anyway, welcome. Kreston Reeves, hopefully most of you know we're a full professional services firm, and we've been really actively monitoring the coronavirus pandemic, looking to see what the government has been doing for businesses, talking to our clients about what the government assistance is, and really how they should be looking at coming out of the crisis when that happens. So there's a couple of slides here just to cover off regarding Kreston Reeves. As you can see, we're a southeast firm, and we work very much in the business advisory space. We also undertake tax advice, auditing, accounting, and corporate finance support. The purpose of our webinar series is really to look at the current circumstances that businesses are facing, trying to come up with practical tips and guidance to help businesses, our clients, and anyone who wants to join the webinar to achieve a brighter future. This particular webinar, the first in our series, is looking at scenario planning for businesses, looking at crisis management, and look at safety management for businesses per the government guidelines. And we'll be obviously close with a question and answer session at the end. So if you have any questions, then please do just put them on the chat line so that we can have a look at those. Just a reminder of who I am. So just before we get into scenario planning, we sent out a questionnaire, a survey, when we were preparing for this. And we asked some questions about scenario planning, crisis management, and how you were coping with the crisis, and how you're sort of set up to work safely in the future. So the results were really interesting to us, and we've summarized them on this slide. Hopefully you can all see that. It's really interesting to see almost a sort of Brexit type split on a couple of the questions, and these have been really helpful for us to be able to look at how we actually deal with this presentation. So it seems that a number of people have got scenario planning and have found it very useful. Actually, no one responded us to say that they didn't need a scenario plan, which was one of our optional responses. In terms of a crisis management plan, 70% of our respondents have got a crisis management plan in place, and it would be interesting to understand what they actually look like. I'm sure they go from quite fundamental plans through to very intricate plans for much larger businesses. And then looking at how the planning prepared your business well for the crisis. 47% said yes, 53% said no. And obviously, as many people have said, this is unprecedented, so that's not entirely unexpected. And then we have a range of views of people as to how well prepared they are to work safely during the guidance, during the lockdown and coming out of that. So we'll just move on to scenario planning. So really, what we wanted to say about this is that scenario planning is obviously hugely helpful as far as a business is concerned in this situation. And And we're in the grip of the crisis. We're told, obviously, that the UK, like many of the countries in the world, has gone into a recession. So this is really looking at scenario planning for how your business is going to come out of the lockdown, and what that really means for the business, how you're actually going to deal with it. And what we said there is that it's really about realities and assumptions. It's thinking about the future and how it might look. And I think that one of the things about the lockdown and the changing in consumer demand is that it's really difficult to predict for many businesses what this is going to look like on the other side of it. There are some businesses, for example, probably hairdressing, and barbers who will get straight back to business. Their people will be fully employed. There'll probably be a surge of people who want to have their hair cut and other beauty treatments. And so actually those businesses will probably get back and running very quickly, and then that will go on, and they'll probably get back to normal very quickly. There are other businesses where clearly that's not going to be the case. There'll be some businesses where actually the cultural shift in how everything has changed over the last couple of months will mean that perhaps products will be less in demand in the future, and also it will be very difficult for businesses to be able to plan with social distancing, how they're going to get back to a normal level of turnover and how their business is going to be profitable. So it helps to think about what you can control, what you can't control, and to think laterally about how the business might be able to go forward. For example, is it possible for the business to look at diversification? We've heard about many businesses during the crisis who've actually switched from their normal production lines to producing PPE. And those sorts of opportunities are out there for businesses potentially to be able to adapt and develop and create a different direction. So really define what you don't know about the future. There will be some guesswork, working out what that might look like, and then really how that is going to impact on your business. You need to take into account the cultural changes that we've been looking at and that many people are talking about now, because everybody is saying that life will no longer be as we know it into the future, and I think that's very much the case, and it's up to business leaders really to drive that going forward. It does really pay to bring things back to basics and focus on the key drivers of the business, how these will impact the business going forward. So we've put a couple of examples up there: revenue, customer numbers, supply and demand. Really looking at what the revenue line is likely to look like in the future, how quickly revenue is likely to recover once the lockdown really eases up. On the costing side, it's worth looking at pricing changes, really to try and make sure that the products, the services are actually are attractive to people going forward, and actually meet up with what expectations are. Professional services firms through to retailers, may have to adapt their pricing because clearly customers and clients are going to be more challenged about how they spend their money over the course of the next couple of years. Sorry. Changes to credit terms. Clearly, there are many businesses out there who are finding that cash is absolutely king at the moment, and that cash is quite pressured. So clearly, businesses trying to maximise their working capital will be trying to change their credit terms, get money in from their clients and customers as quickly as possible. So thinking about the key drivers to a business is absolutely a key way to start this process, and then really to think about the different scenarios, and by that we mean a best case, a worst case, and then a medium case or reality. And we'll come on to how you do that in a moment, but our message really is to try and keep that as simple as possible and not focus on too many uncertainties. One of the, there are a couple of models out there which can be very helpful for a business actually in thinking about these big strategic goals and thinking about how the future might look. One of these is a Swot analysis, which many people know around, and there are many other models. One that Kreston Reeves in particular is keen on using is a steeple analysis, which is a measure, an analysis of all of the different external factors, whether it's government, whether it's environment, whether it's technology, that can impact on a business going forward. And that just gives you some headlines on which to hang your thoughts and to make sure that you don't miss key areas. So certainly a steeple analysis, a pest analysis is a really good background document to crystallize your thinking and make sure you get down all of the points that you want to raise. At the end of the day, what we have to remember is that going forward, businesses need to make a profit, and we are in this rather unreal situation of the lockdown and coming out of this and trying to get back to work. And businesses are very much focused on the practical aspect of getting back to work, but we also have to look at the bottom line and make sure that no matter how the business evolves in the future, it's still able to make a profit, it's still able to make a return to its owners, to its shareholders. So that's a really important aspect not to lose sight of. One of the next webinars that we'll be hosting actually is one that looks into more detail about cash flow forecasting. So I'm not going to talk a huge amount here, but I think it is an important part of scenario planning. Looking at forecasts, they're an invaluable tool for scenario planning and really looking at ultimately how the business is going to be managed going forward. A scenario planning forecast can simply be a cash flow, looking at what's in the bank account, looking at what the inflows and outflows of cash are going to be, and making sure that the business is keeping within its funding limits. We as accountants prefer to see what we call an integrated forecast, which is a forecast which integrates the balance sheet, a profit and loss account, and then flows that information through into a cash flow. These are quite sophisticated spreadsheets, and there are some software tools out there which can also help to build these projections going forward. Some models will be weekly, and a typical business model to manage a crisis is a weekly cash flow, which gives you really good control on a business and is reviewed every 3 months. It's called a 13-week cash flow, which you can roll on from week to week and look at the next 3 months and see how your business is going to perform and update that on a real-time basis. You can also get monthly cash flows and projections looking at a year ahead or 2 years ahead. Now, there are models out there on the internet, and various companies have put models out there. Generally, for a good model, you have to pay quite considerable amounts. If your accountant, your business advisor may also have models that they're prepared to share. The models, spreadsheet models, can be very complex, and so accountants, for example, Kreston Reeves, we wouldn't want to sort of share a really complicated spreadsheet with a client, perhaps that doesn't have the Excel skills to be able to do that, because if you do happen to corrupt the spreadsheet and the linkage between the different sheets that are within a model, if they get corrupted, then you can get some very misleading information coming out. So it's important that these are done properly, and we would very much recommend talking to your accountant or business advisor as to how to approach that if you haven't already got a model. If you do get a forecasting model, then sensitivity analysis is really important. And essentially what this is to get a sort of base case what the business might look like going forward. And then you should be able to change the key drivers and to be able to see what the results of that are. See, for example, if you changed your funding line, if you went, for example, from a bank overdraft into asset-based lending, you should be able to model that and see what the difference is between the different financing models, what the costs are, how the different financing models cope with the peaks of cash flows, when you might have to pay out sort of large sums for, say, for tax bills or rent. So a good forecasting tool will allow you to change these key drivers, and also to be able to save the different scenarios that you plot, so that you can easily switch from one to another and make sure that you understand how the business changes with these different different factors, such as funding or going into a different marketplace. A good model will be very helpful for a bank. So we've heard many of our banking contacts say that one of the things which is difficult for them when customers are applying for the business interruption loans that are backed up by the government is that the forecasting that goes alongside them is not that helpful. So really these spreadsheets, these models are very useful for all sorts of situations. And they're also useful for investors as well. Someone looking to put more money into a business to see it through the next couple of years, or possibly to take up an opportunity to acquire a business that might be in difficulties. It's very useful to project what the future might look like with one of these tools. I've just seen a question flash up from one of our viewers saying, are these models useful for all businesses, because many businesses are unique? And the answer to that question is that actually a good business model should be able to be adapted for any business, literally any business. When I was much younger, one of the people that that was a mentor to me said essentially that any business can be broken down into debits and credits. And that is true to a large extent, even though businesses will have different business cycles, they'll have different drivers. Ultimately, all businesses produce a balance sheet and a profit and loss account, and therefore can produce a cash flow. So models should be flexible enough to be able to be adapted exactly for the revenue streams for a particular business and all of the complexities that might come with supplier relationships. They should be able to cope with those quite well, and they do get very complex in order for them to do that. Okay. So we obviously talk about best case scenario, worst case scenario, and really what we're saying here is that positive thinking is really, really important here, to actually think about what the best case scenario for the business could be, what you would visualize, how you would like the business to look in a year's time. And whilst there is a lot of uncertainty out there, really we're encouraging everybody to think positively about their markets going forward, and what the business could look like, to try and sort of really strive for the best possible outcome from the crisis for our clients and anyone who's listening. So using the modelling, we can certainly look at the best case scenario, and you can look then to see what the key drivers are, what to see how you need to really look after the business and focus on key areas to actually try and maximize revenues into the future and really keep your costs under control. So we're encouraging everybody to think very positively about their businesses and to try and think of the opportunities that could be out There is just a note of caution there that we are still in very unpredictable times, and so a key tenet of scenario planning and crisis management, as we'll see, is to make sure that cash reserves are there, just in case there's a further disruption, perhaps a further lockdown into the future, and making sure that a business can be resilient in that eventuality. The medium case scenario planning. So you've obviously got your model. You've thought about the best case, and sort of look for what the reality is likely to be. Work out sort of what the most medium case is likely to be, what the reality is likely to be if your business doesn't turn out to be a star performer over the course of the next year. And again, cash flow planning is going to be helpful. Scenario planning and sensitivity planning, looking to see if you've got a restriction on capacity, perhaps because some of your staff become ill in the future, or if you lose a customer because a customer gets into difficulty and can't continue. Need to look at those sorts of potential impacts on your business to come up with something which is real, something that is likely to happen without too much disruption into the future. So if you find that actually your business with for example, customers failing, or with perhaps employees going off sick and therefore not having sufficient capacity, it's important then to think about the other flexible cost savings that you might be able to introduce. So things like property costs, fairly fixed. It's very difficult to change those unless you have a break clause coming up in a lease, or you've got a flexible arrangement with a landlord. But it's worthwhile thinking about that, and thinking if you can change that model, change that property model. Think about whether there are other cost savings that you can introduce within the business to get you through the difficult period. And then there's the worst case scenario. And as somebody who works within restructuring, this is something that I'm very used to. Scenario planning and looking at the worst case is really important as well. Worst case scenario is to look at what happens if the business just can't continue and can't work within the cash reserves and the funding relationships that it has. So again, looking at cash flows is really important, but it's also very important in that situation to think about a wind down reserves calculation. No one wants to sort of continue to trade a business which is starting to fail without knowing that actually they could wind down the business, pay all of their employees and suppliers if they absolutely needed to, and to be able to close down the business in a solvent way. You don't want to be running along and then suddenly the business falls off a cliff. So a wind down reserves calculation can be really invaluable in looking at what the company needs in terms of cash to be able to pay all of its liabilities and close down the business without needing an insolvency process. So that's a really helpful thing to look at, and it's a very responsible thing for directors of companies to look at as well. Obviously, in this situation, we are expecting that insolvencies of companies will also accelerate, and there's already been quite an upturn in formal insolvencies. The government is looking to support that, and they are bringing in some measures, hopefully in June, which will help businesses to give them a bit of a breathing space and to be able to restructure in a more positive way, so that the businesses can take advantage of these and perhaps try and avoid a liquidation process, which is very much the worst case scenario, and a terminal insolvency process. So where businesses can perhaps be sold, whether they can come to arrangements with their creditors, whether they can just get a breathing space. There are lots of tools there for businesses to be able to look at, and to be able to work with advisors to try and find the best solution for them. Okay, just moving on then. Crisis management and planning. So we've talked a lot about scenario planning, and to a certain extent crisis planning takes this into a lot more detail. So crisis planning, disaster recovery is a particular skill set, I would say, within businesses, and takes a lot of thought. It's very difficult for a business which is in a normal trading environment to be able to foresee the future and to look at something like a pandemic and what impact that would have on the business. But many of you already had a crisis management plan from the survey that we carried out, so we're very pleased to see that people take that sort of planning very seriously. It's obviously a very responsible thing to do. So crisis management is something which obviously we get involved with quite extensively with our clients, and businesses. Certainly a key factor within the crisis is that many businesses that were very sound businesses had a really positive business model before the crisis have come into the crisis and been severely impacted by that. And one of the again the features of the crisis is that with the lockdown, with the loss of revenue to many businesses, businesses will actually be accumulating quite a lot of debt during the crisis. And clearly the government is helping with some of that, but a lot of the help, other than the furlough scheme, is coming through loans. And obviously businesses need to be able to pay those loans back into the future. So certainly a business that goes into a crisis like this with a good amount of cash reserves is going to be in a very strong position to be able to trade through it. And clearly, if a business has got a good, sound business model, a profitable business model, then it'll be very strong coming out of the crisis, provided that it can get back to that business model working effectively. So from a crisis management point of view, some of the real key advice that we would give a business is certainly to look at the short-term cash flow to make sure that the business is actually able on a week-by-week basis to keep track of how well it's doing, and to make sure that it's got enough money to pay wages and rent and its suppliers. We would also recommend very strongly that a business communicates. So communicating with all sorts of stakeholders, whether that be employees, whether it be funders, whether it be the investors. It's really important that a business has a coherent communication plan to be able to deal with the crisis. In larger situations where, for example, there might be public interest in how the business is doing, a business perhaps like BA would be an example of this, then probably there will be a team of PR consultants who will come in to help the business to communicate effectively and straightforwardly with its stakeholders, but obviously also to try and keep a positive outlook on the business and keep that customer confidence and investor confidence. If disaster strikes, then certainly that is something which businesses need to be very quick to respond to, and there will be opportunities within that as well. So obviously disaster can be, a fire in a premises. It can be something like this where employees can't go into a building. So it's very important to think about how workers and employees can be agile, how they can work from home or from other business premises and be able to continue to access the IT systems and the other systems that they need to use. Clearly, a lot of businesses, distribution businesses, for example, within the crisis have had to deal very, very carefully with their stock and making sure that they can get people into their warehouses to move stock around, even during the lockdown, so that those businesses can keep on ticking over. So really, Detailed crisis management plans are very important to formulate before a crisis happens, but actually once you're in a crisis, then very much it needs to be regular meetings. There needs to be a task force pulled together to make sure that the business and all the different facets of the business are thought about and coordinated, so that actually the actions taken are coordinated and make sure that the business continues. So there's just a summary there on crisis management. A plan should include the defined purpose, the scope and the goals. It needs to be short and snappy, but certainly it can provide a real direction for the business if it enters into a difficult period. You've then got a framework for managing the crisis, perhaps in different teams, different departments, IT, HR, dealing with stock. So different teams within the business need to pull together to actually identify what the key steps are for them to actually take to deal with the crisis. Communication, as I've said, is very, very important. What we would very much recommend also is actually that where there is a crisis, make sure that there is a lot of training around. All businesses will obviously have fire wardens, health and safety training, and really dealing with a crisis is also something which I think certainly coming out of this crisis, businesses will be much more skilled at dealing with and anticipating, what a further disaster like this might look like. Training is really key, and making sure that a management team is effective to be able to work together to make sure that a business comes out of the crisis in a healthy and coordinated way. So certainly there is a lot within that, but I think that communication and teamwork is an absolute key part of crisis management. Moving to the final part of our presentation, this is really something just to cover quite quickly. How we actually get back to work safely. So clearly the government, hopefully everyone is aware, have issued 8 guides to cover different types of work and workplaces. So clearly offices are very important. Kreston Reeves has been looking very carefully at that. We have there are guidance for construction, outdoor work, for factories, for labs, restaurants, and a number of different businesses are having to look very proactively at how they're actually going to make this work into the future. And this comes back to a point, which is that businesses obviously do need to look very carefully at how they can actually make their business run profitably and effectively with this. We've already seen supermarkets adapting to this at a very early stage and being very safe in the way that they allow people into their stores. But it is very difficult for restaurants, especially sort of seated restaurants, to think about how they're going to be able to cope with that and have social distancing and yet have enough covers within the restaurant to actually make that work. And certainly we've got a few clients who are actively thinking about that, but it certainly is a problem because ultimately trying to generate enough turnover to cover the business overheads in that sort of situation is very, very difficult. So there's government guidance out there. I think we have to regard it that the government guidance is going to be almost a minimum standard from a health and safety point of view. And so employers will have a responsibility to implement the various measures put in place by the government, and almost to sort of go beyond that if they can, to make sure that their people are safe and they're looked after. Certainly that there is a mechanism for reporting to the health and safety executive if there are any problems, and certainly if someone was to contract COVID from the workplace, then that is most definitely something that they want to hear about. one of the key strategies which has been encouraged by the government or businesses have been told that they need to carry out a risk assessment. So the risk assessment needs to be carried out in relation to the business wherever people are working, and to make sure that the business is adhering to the health and safety executive guidance, and to make sure that not only employees but customers and anyone else involved with the business is going to be able to social distance, and that there is going to be transmission risk is going to be minimised. So the guidance is being updated quite regularly, and certainly many trade bodies relating to businesses are looking as to how to help their members with these very difficult new regulations which are coming in. So a risk assessment needs to be carried out. There is actually some guidance from government which is encouraging employers to put these risk assessments onto their websites to show that they actually have carried them out. Another aspect of this is obviously employees. There's been lots of talk about how employees who've been working from home, are enjoying this to a certain extent. Some people are finding it quite stressful. Some people are working well with it. But we're all having to get used to this new world of Zoom and webinars and doing everything remotely. And so employees coming back into a work environment, particularly in office, may have to stagger their start and finish times. They may have to work more agilely, to work a number of days from a week from home, and only come into the office when they absolutely need to. So it's going to be a lot of planning, very different world out there when we do come back, and there is a great opportunity for business as well to be able to adapt how they actually interact with their people, with their customers, to make sure that we all take advantage of the technology which is now available, and also to be able to help the environment by not travelling around quite so much, especially when it's just literally to go and sit in an office elsewhere when we don't really need to. So just to bring this to an end, I'm aware that I've slightly gone over time. We have 5 different top tips here, just to share with you. The first is to keep your scenario planning simple but informed. It's very easy to overcomplicate this, but just keep it simple. Cash flows are absolutely a key item of this. Calculate the wind down reserves. We talked about this in crisis management. It is helpful, not necessarily when you're in the middle of a crisis, but when you've got some time for your finance team to calculate what the wind down reserve would be for a business. It just gives you a measure of perhaps when you need to take action if things aren't going as well as you want them to. Practice crisis management and practicing crisis plans, checking that these work, training and making sure that everybody knows what their role is in a crisis is very important to make sure that the management team are absolutely integrated and working together. Undertake risk assessments and adapt these. We've just been talking about that. And don't panic. Be informed, seek advice, talk to a trade body, talk to your professionals, and make sure that you're armed with the most up-to-date information about how your business is performing, with management information on a very timely basis and projections going forward. Okay, well, I think that we have a couple of questions which I will just deal with quickly, and I'm very happy to take other questions. So I'm just having a quick look here. So we've got a couple of questions which I'll just deal with quickly. Can landlords obtain financial assistance from the government? And is the landlord still able to pay dividends? This is a really difficult area. Clearly, at the beginning of the crisis, the government the government provided some respite for tenants by advising and putting legislation in place such that landlords couldn't evict tenants if they didn't pay their rent in March or April or May. Clearly, there's another rent quarter day coming up at the end of June, so that will create another perhaps problem area for landlords and tenants working together. I think by and large, landlords and tenants have worked well together, but we really do feel for landlords in this situation as well, because landlords clearly have got bills that they need to pay, funding requirements, etc. I don't think there is a great deal of help for landlords other than through the business interruption scheme and the other funding which has been provided by the government through either the furlough scheme or these government-backed loans. So there is no specific help for landlords out there, and clearly I think as the crisis goes on and businesses find it difficult to recover, I think it will be quite a stressful time for landlords and tenants to be able to work together and try and get through to the other side. Certainly it seems as though perhaps a number of businesses will be thinking about their property requirements into the future, which could add further pressure to this. Is a landlord still able to pay dividends? Well, I think it's actually, this is something that we have covered on our website as to whether businesses can pay dividends during the crisis. And I think there's two aspects of this. There's actually the government, the statutory definition of paying a dividend, which is that you can pay a dividend if you have distributable reserves within a business, and that is a snapshot. So at any one time, if the business has got enough money to pay a dividend and it's got clear reserves and there aren't any contingent liabilities which are likely into the future, liabilities which are likely to pull the business down in the foreseeable future, then a dividend can be paid. But in the current crisis, with all the uncertainty, businesses have been holding back from paying dividends, just in case there is something within their business model which will pull down the reserves and will make it perhaps dangerous for the company to pay money to its shareholders. You've also got the sort of what I call the moral court, which is that where government has funded businesses, especially with furlough payments, then I think that there is a growing moral case for businesses not to pay dividends to shareholders during that time if they're receiving government funding. It's a very, very difficult area. I think certainly the certainty is around the legal definition of distributable reserves and what a company can actually pay and what it can't. There's another question: how detailed do crisis management plans need to be? I think this really very much depends on what the business actually is. Crisis management plans should be sufficiently detailed that actually everybody within the business who's in a position where they have to act quickly in a crisis needs to know what they need to do. So, for example, with a crisis, if, for example, there's going to be an industrial accident, or for example, there was going to be, let's just say there was going to be a supplier turning up to a company's premises and they didn't have adequate PPE, and they didn't know about the social distancing rules. What then should the business do, and what should the staff who are there to receive the supplier's goods, should they actually be who should they be reporting this to, and how should they actually deal with the situation in detail? So I think that there are different levels of crisis management which require different levels of detail. So on a safety basis, I think you need very detailed plans as to step by step what should be carried out if a business is, and certainly the employees of the business are put in a position where they could be in danger. But I think that also with a crisis you can have, for example, if you were to lose a big customer, or if your revenue drops off a cliff, as has happened to many businesses in this situation, then from almost a a management point of view and a finance team point of view, how do you cope with that? How do you, what measures do you take to communicate with suppliers that perhaps you can't pay them on time? What steps do you take to talk to your funders to see if you can extend financing facilities? So I think there are some elements of crisis management which are very much strategic. There are some elements of it which are going to be very, very detailed and need to be to give employees guidance and to keep them safe. When should we worried enough to seek professional advice? Again, really, really good question, thank you. I think that for me, the question of when you should take professional advice in a financial sense, I think is when you see the position getting worse week by week. So if you have got liabilities building up that you know that you're not going to be able to pay them on time, knowing that you're going to have to push out supplier credit terms, knowing perhaps that you're going to miss a payment of rent or a PAYE in the future. I think that's the time to actually pick up the phone to a restructuring expert and a professional advisor and to talk about how the business is performing and perhaps what steps you should take. One of the key things that I often tell businesses when they start to feel that they get into a difficult situation is actually to make sure that they have weekly board meetings and that they actually record down the reasons why the business is continuing. And just to have that documented, they can go through a board meeting, discuss the operational aspects of the business, what's happening, but at the end of it to be able to put a key question at the end and say, is it right that this business should continue to trade? And to record the key reasons why you think that the business it should go forward, I think is a really important document. It's very useful if the business were to fail at a later date and there was to be a hindsight review. So I think the messaging is that it's very, very much worthwhile picking up the phone to a professional advisor, whether it be an accountant or a restructuring expert, and to speak to them about where the business has got to and what sort of next steps there should be and what sort of check-ins there should be to make sure that the business has got the best possible chance of survival by looking at a wide range of options. There's a question here. With the wrongful trading regime temporarily suspended, would your advice change to a business in difficulties? And I think the answer to that is no. So the wrongful trading provisions, for those who aren't familiar with this, are wrongful trading is essentially an action that can be taken by an insolvency practitioner, a liquidator, or an administrator. And it's an action that can be taken against directors personally, basically if they continue to trade beyond the point where all hope is lost and the business is just on an inevitable trajectory towards liquidation. And if creditor liabilities increase during that time, then there can be personal liability for the directors if action is taken against them. Now, in March, the government said we're going to suspend this wrongful trading concept for the UK up to the 30th of June. In fact, the legislation for that hasn't yet passed through Parliament, but it is in a bill which is going through Parliament, we understand, at the beginning of June. So wrongful trading as a concept is not applicable between March and June. And the reason for that is that where businesses mothballed, they may have put all of their employees onto furlough, they've shut down the business, obviously, in accordance with the lockdown rules, but they may still have liabilities accruing on the underneath, rent liabilities, in some cases rates liabilities, and these are liabilities that they can't afford to pay, but they just keep on racking up. So, the suspension of wrongful trading is really protecting that sort of position, because there is uncertainty as to how the business will get going again in the future. So there's fundamental uncertainty, there's liabilities continuing to accrue, and therefore there is a vulnerability there. However, I think that really, for business owners, they actually need to look at this scenario planning, look to the future, and see if they can see a positive business model coming out of the other side of this, because certainly there is a temporary respite of wrongful trading. But when we get through into July and August and September, if a business is not able to get back up and running, then that situation will very quickly come back into view. And I don't think that there will be a further extension of the suspension of wrongful trading. I hope that's helpful. So another question, any thoughts on the future of the high street, which was of concern to many businesses before the crisis, but this might accelerate its decline now? Certainly, I think that that the high street has seen considerable challenges. I think particularly, you know, we have seen a number of retailers and casual dining businesses that have gone bust as a result of the lockdown. They just can't see that business model coming back to life in the future. And I think probably there is a very real danger of where we've all had to perhaps order online and delivery services have been much more active during lockdown, that, you know, perhaps there will be a change in culture and mentality of people not necessarily going shopping into the future. So I think it's a really difficult time for retail. One of the things I mentioned within the presentation is that ultimately businesses still need to look at their business model and be able to make a profit going forward. And I think where we have social distancing in shops and the footfall is going to be reduced, that's going to be a real challenge for retailers getting up and running, because you'll need to have a certain level of staff that are within the shop to make sure it functions properly, and to be able to cope with an influx of customers. But actually social distancing means probably there will be much less footfall for many months to come. So it's a really difficult time. In terms of rent, which is one of the most significant retail expenses, there's been quite a lot of talk about rent actually moving from a fixed basis, as it is at the moment, to almost a turnover-based rent. And that if that were to come into force, then landlords and tenants would be sort of sharing the risks of a trading premises. Whether that will come through and become a real thing within the property market and the business property market remains to be seen. There's a question here, which is, we have an employee who is 70 plus. She can't come to work. She's been self-isolating at home on full pay. Can we pay her SSP if she does want to come to work? I think that is a little technical for me as a restructuring person, but we will certainly be very happy to look at that and to help you with that. So perhaps we can come back to you on that point if we can see which of our viewers put that question forward. Okay, so just to say, a recording of this webinar will be circulated this afternoon. I hope that it's been helpful for you, and I think I'll bring it to an end now. So from our point of view at Kreston Reeves, thank you very much for attending. I hope it's been very helpful for you. If you have any further questions that you'd like to ask, please do get in touch with myself, and I'll be very happy to help you with that. So I'll bring this to an end, and thank you very much.